following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for all things options related, a little bit of options wit, a little bit of options wisdom, a little bit of insight, and perhaps analysis. And just the cherry on top is, of course, the hilarity. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. Back from the East Coast and back in the old hosting chair. Although I like to say we did have an able stand-in for me last week, and that was none other than the man from the mountains himself, good old Uncle Mike Tusaw from Know Your Options Inc., who is joining us, making a rare Monday appearance again. Uncle Mike, welcome back to the show, sir.
It's just hard I'm just not able to get enough of this show. I love it that much.
It does get in the blood after a while. You know, it's infectious. It's like chlamydia in that sense.
Okay.
And that's the hilarity.
I don't know what to say to that.
I think it's good. I think we go a little blue right in the beginning. It's good. Set the tone for the rest of the show. Of course, Sebastian isn't here, so I might not be able to live up to that on a regular basis.
He would have had a much snappier comeback than that. What do you mean? Just chlamydia? Come on. Can't get something worse?
Ebola. But yes, Uncle Mike, thank you for taking the hosting reins. How did it feel to sit in the big chair last week?
It's a rough job. I'm glad you do it, not me. You're the man.
Rough work, but someone has to do it, sir.
That's what I was thinking.
You know, the constant beatings make it hard, but you put up for it for the fame and glory and the big bucks that lie on the other end, sir.
Well, I realize in dealing with your little birds too, if you're not nice to them, they'll peck you right in the face.
Yeah,
so you gotta
vicious.
just be nice to those little birdies of yours. But they cooperated, but you gotta talk to them in their own way.
You gotta keep that bird feed coming on a regular basis too. If you get stingy with that, they'll let you know in a hurry.
They sure did.
You'll feel
that's for
the
sure.
peckings on the back of the old head. Speaking of peckings on the back of my head, that sound is, of course, one Andrew Giovinazzi joining us all the way from the hinterlands of Maine to make the old show again. Andrew, were you on the Uncle Tusaw hosted spectacular last week?
I was, and he was the bomb. He did a wonderful job. So I tried to do my part as the option lobster from Maine to help him on his merry way, but he did a very fine job.
How are things in the land of the pit by way of Maine?
Well, by way of Maine, it's very lovely here. The option pit is doing quite well. I'm doing quite well. I'm trying to get a little fly off here at the end of the day, but it was not successful for me, so hopefully I'll try in the morning. But as usual, my own trading seems to take a back seat to all of the many things I have to do for option pit.
It's funny when you actually have business even if it's a trading-related business, how that business tends to supersede the trading elements of the things
you know what you are? You are just like everybody else. You are trying to mentor with, like, you're lucky you can put on 1 or 2 positions a week.
Yeah.
And watch them.
You know, I discovered that shortly after I started launching all these businesses. I said, wait a minute, this is cutting into my trading time, all this doing of other things on a regular basis.
And you have to definitely say, you know what, I'm going to accept the fact I'm just going to put on a couple trades a week, and that's it.
You know, it's probably good. It's probably good for you, though, too, because it allows you a little more insight into the mindset of your clients, because that's exactly what they're doing. If they're lucky, they're putting on a couple of trades a week if they have the time, you know. So you can kind of see it from their eyes for a bit, and it definitely gives you much more of an insight into that high end of the retail spectrum, and you start to learn
and really
and see
helps
how
for
they
trade
think.
Selection for us. Like as we write the strategy letter and all the stuff we do for the pit report. You know, there are only so many trades that really look halfway decent that we see, you know, on any particular day. So you tend to go to the ones that are more tradable from a retail point of view, which aren't exactly the trades I necessarily like myself, because I like a certain trade style. It doesn't mean they're as effective. It's just, you know, I like ones with crazy amounts of upside in it, and, you know, just, you know, the more short data controlled trades are probably better for retail because they don't have to keep looking at them all the time. You know, a lot more ratio spreads and stuff like that are positions to take care of themselves a little more, of course, except when you have to do stuff. But when you have to do stuff, you still have to do stuff.
We know you, Andrew. You know you like to just blast out downside all day long. If it's not blasting out downside, you want no part of it, sir.
Exactly. It is really the easiest thing. You just sell it and you just wait till the clearing firm taps on your shoulder to put more money in your account.
What? I still have a little more margin? I haven't fully maxed out my margin? Sell, sir, sell.
Sell
what
more.
Are you doing? Get back out there. Turn those machines back on.
So yes, but it has been good from the client point of view for me there. So
speaking of the client point of view, we are also joined by the man on the move over there at Options Express, none other than John Grigus. What is your title over there these days? Is it Viceroy, Major Domo? What is the business card saying over there, Mr. Grigus?
I haven't updated my business card in a couple of years, but I think it's just manager. I'm just a manager, middle of the road, big boss. Yeah.
That business card belies your true status, sir. You're on the move. I saw it for myself last week in New York, Mr. Grigus, climbing the ranks. One rung at a time.
It was funny coming around the corner. You're the first person I bumped into out there, which was so it was nice to see a familiar face right off the bat.
It is odd to go to that show, and everyone I run into is pretty much from Chicago, and I have the same realization. I could do all of this in Chicago. Why am I out here at this big show in New York to meet people from Chicago all day long? It's kind of funny. But yes, the industry did converge on New York last week for the big FIA OIC options conference. Maybe we'll touch on that a little bit in the old trading block.
The Trading Block.
All right, and that trading bell means it's time for the trading block. And, of course, it was a little bit of giving back some of the QE3 love on the old street today. Most of the major indices down about 0.3 of a point or so, and the VIX cash rising a wee bit, getting, I suppose you can say, some of the weekend back, but I'd imagine, in your estimation, probably underperforming, Andrew. VIX cash closing up about, just ticked down a little bit, up nearly 0.1 of a point to 14.6.
Yep, we're definitely reading that as vol came down a little bit. Remember we had that little gas on Friday on the close. I think it was because all the people were worried, I think, about us attacking our embassies and all the kind of nonsense that the extremists seem to pull on us on once every 6 months or so. So I thought that kind of popped the vol. The weekend went back in fast, and just not much. We didn't get that same sort of that post-weekend contraction today. So yeah, I read that as a vol. We're actually going up a little tiny. The vol coming down a little tiny bit here for today.
You know, Friday was one of those weird days. I can probably count on one hand the number of those days we've seen recently, which is going into a weekend first off and having vol up, which is unusual in this day and age. And then add to that the fact that the market was up heavily on Friday and yet vol was up. And all these combinations really seem to really seemed to cause a lot of people to start scratching their heads. We were fielding calls here over at Options Insider from reporters as far away as Japan, saying why is the VIX up and the market up, and explaining these various contextual levels of volatility to them. But yeah, I think it struck a lot of people as odd and perhaps a bit worrisome that people were waiting for some other shoe to drop. And given all the developments we saw all week, QE3 and the market off to the races post QE3, that obviously there was some underlying issues at work there to still keep people
I think so. I thought
buying vol. I mean, when was the last time you saw people heavily buying vol going into a weekend over the past 6 months, let alone when a day when the market is up strong, buying vol going into a weekend? That's a very unusual event in and of itself lately.
Yeah, you don't see that very much.
Well, and we're at the bitter edge, though, of, I think the volatility is more fair. When you're moving 1% a day, what is that, 13.5%, 14% annualized vol, something like that. So you're at kind of that point where, we're going to get the 1% moves now every day. I think that snuck back in. I think whatever the little world turmoil events. And we hit a vol low like 13.5 for the VIX, I think, in the morning. I mean, all my little short vol positions were like, woohoo, in the, probably in the first half hour of the day or first 45 minutes. Then it spent the rest of the day kind of ticking back up. And now everybody's looking around saying, the Europeans are squabbling again. There was no more real bad embassy attacks. And I think that, I can feel it settled the ball settled just a little bit. And also, I think for a while we were tracking just the sort of October downside skew got super cheap. And maybe, just a little bit came back on that on Friday. So I think it was just a confluence of vol's bouncing on the bottom, and when it bounces on the bottom before it really wants to find some new low level, it's going to have a couple of fits and starts probably.
It's funny. I missed the show you guys did on Thursday last week, so I couldn't discuss. Of course, I leave for a week, and you guys get one of the biggest events in the markets in quite a while to discuss, which is a ballyhoo for you, I suppose. But we get the days that are 0.0 for the most part when I'm on the show. But it was interesting to hear that unfold at the day when I was at the conference, because it really... maybe, John, maybe you heard something differently, but I didn't hear many people running around talking about QE3. Everyone was very much involved in what was going on at the conference. And you think a big event like that, I think people had maybe either already discounted it or they weren't that concerned. These are mostly professional traders and industry people who, for the most part, tend to discount whatever the government does from a regulatory or intervention perspective as being wrong-headed and inefficient at best. So maybe they were just, here's another endless round of money for no apparent reason. But it didn't really seem to make the waves at the event kind of like I thought it would. In fact, I didn't really hear about it till the middle of the day. I was kind of busy running around doing some panels and stuff. I didn't hear about it till later in the day, and all of a sudden, you think I would have been news that would have percolated through a lot sooner. I don't know about you, John. Did you have people running around talking about QE3 throughout the show last week?
No, not at all. I actually had it on my calendar to kind of look up the information as it was released, and it was nothing that really popped up and was a topic at the conference. And even the emails that I got from people at work, it was quiet. I think the actual move came about 45 minutes before the close when Bernanke had maybe issued some statements that got the market moving. But the original press release or the statement release didn't even seem to move the markets and didn't move the needle on the volume or phone calls that we had here at Options Express.
Yeah, weird. You think a massive event like that has been discussed for so long and has been kind of bolstering the market for so long, the notion of this Bernanke put when it finally actually is exercised and finally comes into play, you think that would cause a little more furor than apparently it did. So that was interesting to me.
But however, if something, the people must have went home and watched the news that night, because the following day was a completely different story. It was one of the busiest non-expiration days we've had here all year. So that was fun walking into a storm at work when I got back. So.
I guess
he didn't say that. He didn't say that.
Yes.
It was. I chose that word specifically because that's what it was. It was horrible here when I got back. And my flight was delayed 2 hours, and I was planning to be here by 9:30. Ended up being 11:30, and it couldn't have been worse when I walked into.
It's fun having a chance to go. I go to that show every year in New York, and what that is a big kind of industry dog and pony show for the most part. All the exchanges and brokerage firms and trading firms get together and kind of talk about regulatory and all these things that are developments and exchange developments and competitive developments and new products and all these things that kind of go on behind the scenes and are usually beyond the interest or reach of a lot of the active retail community. Of course, that's starting to change. But they wrote me in this year to do what they call the Exchange Leaders Panel. This is a big panel they do multiple times throughout the year at all the big various industry conferences. They bring all the exchange heads and all the exchange CEOs onto a panel, and someone usually moderates and asks them some questions. It's usually kind of devolved into a bit of a dog and pony show over the past few years. It's really just kind of people coming in, doing their rote talking points. And so the FIA roped me into doing it this year. So I thought, if I'm going to go all the way to New York and do this session, I want to make it interesting for myself and also for the people sitting in the audience. And so I started mulling over what would be some fun topics to talk about, as opposed to how many exchanges are too many exchanges or penny pilots or all these other things that are typically discussed at these events. And I hit upon something that actually Mike Cavanaugh and I have been talking about a lot off the scenes and at our various Options Alliance events, and particularly in the wake of all of these scandals, PFG, MF Global, what have you. People are starting to look with a very jaundiced eye at the options industry as a whole. And I thought, where is the next kind of wave of criticism poised, and where is some of the feedback we're getting from our listeners? And I hit upon the subject of all these exchanges we have out there, 10, 12, whatever the number is right now, more on the way. And they're all for-profit, demutualized entities. And essentially, they have shareholders and investors, and they're operating for profit. And that's a huge transition from what it was when you and I first walked on the floor, Andrew, and you predate me even down there, so definitely different from when you were down there. They were essentially utilities at that time, and they were public, or not public, but they were not-for-profit, member-owned utilities. And now they've fast forward 5 or 10 years, and they become these for-profit entities with vendor divisions, and they're also regulatory divisions, and all these things that are kind of would seem on the surface to be very much at odds with the core mission of an exchange, which is to provide this trusted, agnostic marketplace. And so I kind of went on that angle of attack on the panel. It was kind of fun. I actually had got them to admit that there was a definite conflict of interest between their business models now and what an exchange really should be, which that surprised me. They would admit that in public. And then also kind of hit on some of the things, like maybe they should perhaps be spinning off their regulatory divisions, because it doesn't make sense for an exchange that is for profit, that is out there angling to get clients and customers, is also regulating those same clients and customers. It seems like an obvious conflict of interest. So taking it from the perspective of someone who comes to our site every day or listens to the radio network and is looking from the outside in at this industry, you could easily see how that would be a big red flag to you. So I wanted to bring that up, and we had some interesting back and forth, I think, on the panel about that topic. And we recorded it. We'll be putting it out on the network sometime, hopefully this week, maybe next week, so our listeners can get a chance to listen in on that as well, about what exactly was going on. John got a chance to listen to the panel. I didn't appreciate the heckling of the tomatoes, though, there, John. That was a little over the top.
Yeah, it was a real hot ticket to get, too. I mean, one of the biggest attended panels that we had down there. So I was lucky to scrape a ticket together and get into like the 10th row. But Mark does bring up a good point. He did not let people out easily on their answers. A lot of the responses that they got from the moderators and the different panels were very political-like in their response and wouldn't really get to the heart of the question. And Mark would not let really that slide on his panel and kind of put people on spot. So definitely one of the better ones that I saw that week.
It was kind of fun. I think they were a little bit taken aback by that, to be quite frank, because they're used to doing that panel with some tame industry moderator, usually for the most part, who's their buddy. And so they're not used to someone kind of holding their feet to the fire a little bit. And I've sat through a million of these myself, so I know how boring they could be. So I didn't want to do a boring one. I didn't want to do another talking point one. So it was kind of fun anyway. That's enough of beating of the drum with that conference. But it was an interesting conference nonetheless, talking about regulatory developments and all the other things that are going on behind the scenes. And I encourage you, if you are an active options trader on the retail side of the fence, and I'm assuming if you're listening to this show, you probably are, it behooves you to start paying attention to some of these developments out there. This used to be kind of 10,000-foot stuff for the most part. But now if you're active retail, you're looking at things like portfolio margining, looking at things like spread books, not talking to each other between the exchanges, and all these other big developments that are really starting to impact you if you're doing even 10 lots and up, let alone doing any spreads out there. Pricing changes, fee changes, how these orders are actually routed, what goes into that decision, a very, very opaque process. A lot of these things that I think if you're an active options trader, you can't really keep your head in the sand about anymore. Which is, something I think that's worthwhile for our listeners. So we'll put that session up. Maybe we'll find a few others from FIA if they let us put them up for our listeners to check it out, because it's good stuff. I know, John, you've never been out there before, but I think this is good stuff even for your user at OX to start to become cognizant of how these things actually work and how this business actually works that people are using to trade and trade actively. If you're not paying attention to this other side of the fence, you could really be doing yourself a disservice.
Yeah, and I thought too, if I'm not sure if you can grab this one, but that the one we had late on Thursday, which was like the heads of all the online brokerage firms. They had E-Trade up there, Trade King. We had an Options Express representative, Joe Vitri, CEO. And then there was a fourth person. I think they were, was that Rich Rapetta? Mark, was that his name?
Yeah, Rich Rapetta, the analyst, was up there, yeah, which was I thought was an odd fit for that panel.
Yeah, kind of. I didn't know, maybe somebody canceled at the last moment because I know he was the keynote too. But I thought that was a good discussion too, because it kind of, brought together the people that, take our orders. I mean, not from Options Express, but I mean the retail public, and kind of opened up pulled back the curtain and allowed them to talk freely about, where they thought the retail environment was headed and what they think some of the hurdles currently are and are going to be down the road. So I enjoyed that one too. So if you can grab that one, might be good for our retail clients.
Yeah, I'll talk to the FIA folks and see if we can put that out for them as well. I always like hearing panels with Don Montanaro. He's been on our show a number of times, on our network, I should say, in the past a number of times. He's very, very straightforward and not a kind of talking point kind of guy. So he'll tell you things how they are, which is refreshing for us and for our listeners. So I always like to hear panels with him. I didn't have a chance to hear all of what Joe Vitri had to say on the panel. I'll have to listen to the download to hear all of it. There's so many different things going on at the same time. I was running kind of from session to session. There was concurrent sessions going on, but interesting stuff nonetheless. So that'll probably do it for the industry wrap up for right now. But I like to make our listeners aware of these things every now and then, because I know they kind of otherwise take place in a vacuum. And our listeners, for the most part, are ignorant of how these big decisions that impact them are actually made. So it behooves you, if you can, check out the Futures Industry Association website, Options Industry Council. They'll have it up there. We'll also have some rundowns from the conferences on our site as well. You should also subscribe in iTunes or on our website. You can listen to what we call the Options Insider Special Events feed. That's where we put out all of our panel audio from our various special events, appearances that I do at these different conferences and things like that. So our listeners can stay in the loop on some of these things that otherwise might be outside their purview, but still are very interesting to them. Speaking of our listeners, before we wrap up the trading block, John, I know a lot of our listeners want to know, are indeed dying to know. I know you were very busy last week, so maybe you missed the pop, but Groupon took some of the love with the QE3 and went north of $5. So did you take your opportunity to get the hell out of Dodge, or did you double down? Are you still loving the Groupon?
I'm still loving the Groupon. I'm still thinking it's going to close that gap, which is around $6.70 or $7, somewhere around there. But I didn't get to look at anything related to my positions on Friday or the general market. So actually found that Groupon had gone above my cost basis for Friday's trading date, and also Bank of America, which I'm still in too. So I was in black for about half a day. It was kind of nice.
Thank you, Bernanke. The Bernanke puts, printing money for Mr. Grigus. But yes, I took a chance. I took the opportunity to divest myself, roll out of all my positions in Groupon. Now we'll see. We'll wait and see on this one how it performs. But I decided
no more short puts?
No, and I rolled out all of my short puts, all my short put spreads, got rid of all that stuff, closed them out for Mr. Bernanke. Made it nice and easy to close those out for me, so that was very nice of him. But yeah, other than that, I'm still watching this one. I know, Andrew, you've been kind of eyeing it of late. I know post Zynga, you're looking for another one to take you south of 5 in the Web 2.0 space and bring you down to like that 2 or 1 space. So maybe Groupon's the next one for you on that elevator to the south.
I haven't. I did actually better selling the iron, like the iron butterflies in there. That worked out pretty good. When the vol got high, just selling the 5 strike and buying the 4. And on the upside though, I just bought like a 7 call to keep from having things be disastrous. So I've learned my lesson on these junky stocks. I'll just sell the vol and watch it go by. So that was much more satisfying.
Yeah, I agree. That's definitely been my approach with these ones, is defined risk approaches at all points, because you never know when the next Eastman Kodak is lurking in the wings, or perhaps the next Netflix, whatever, going to take you down to zero in a heartbeat. So now that we know that Mr. Grigus is yes, it is. Now you know that Mr. Grigus is still long. We know that Groupon has no upside in sight for the near term. So thank you. I just wanted to confirm that.
I mean, down 10% today. It's really, right back in line towards.
That sounds more in line. Anything else, Andrew or Mike, that you guys have been watching today in the old trading block?
That's all I got for now.
Yeah. Did Apple trade 700 yet?
It did. So I'm short the 690 calls, and we're short the 690s and waiting to be called out right now.
Wow, and you're done.
Wow, that's it. End of an era. Washing your hands of the big AAPL. Wow.
Well, not exactly. I mean, we might sell like some 600 puts or something to get back into it at some point, but we are finally. The plan is to click the sell or to allow it to be assigned at 690, and I was even telling Sebastian, even have a special song picked out for the day it happens in honor of him.
Dreamweaver?
I'm not going to say. It's a surprise.
Brick
I
House,
gave a hint
perhaps?
on the show a couple weeks ago.
I think it's Brick House.
What's the hint?
I already gave it.
Brick house. Now the question is I guess now Apple and Google they decided just to become the same stock, right? So Google now is a $700 number. So those two are just duking it out for supremacy. Which platform will reign supreme? It's kind of like the Iron Chef. Whose cuisine reigns supreme? It'll be.
It is interesting that they're very much encroaching in each other's territory now, and they also are such a parity at least from an underlying price perspective. It does make it a little more interesting of a horse race type of question now than it was maybe a couple of years ago, where their stock prices were divergent and their businesses were very divergent. They were search. This one was hardware. Now they're both getting. I mean, they make the Nexus 7 now. They're both getting into the hardware game. Different perspectives. One's pretty much services, one's making a ton of money on the hardware. I never got a chance to ask you, Uncle Mike, what did you think of the new announcement? Or I guess it doesn't matter. You're out at 700 and then you're waiting until it dips. 690 plus, we'll say.
Yes.
Plus you sold the calls for something.
Yeah, exactly. 690 plus.
There we go. Well, it was part of a collar, so it's kind of an even money on that one.
Right. So it doesn't really count. But I love those collars.
Are those September?
They are October, so I'm still sweating it out for another couple of weeks.
Oh, speaking of collars, before we wrap up this segment, I just have to make you guys aware of something that I heard at the conference last week. I brought it up on Vol Views last week, but I haven't, and it blew Sebastian's mind, Andrew. I haven't had a chance to let you guys know about this. But speaking of collars, I was at this conference last week. There was a panel about the buy side and why it's so hard to get them involved in options, to use their money management, that sort of thing. And there were a couple of different people on the panel, some more, I guess you can call them pro options, more, I suppose you can put them in the anti-options camp. And one of the latter stood up there and started talking about options, and then someone asked him, well, do you use options to hedge your tail risk? And he said, then buy your puts. And he said, well, we looked at that. We looked at the price that the price that it would cost us to hedge our tail risk using puts, and they were so expensive. It got me thinking about why I want to buy a put in the first place. And if I'm worried about downside, I decided that whenever I want to buy a put now, I just sell and go to cash. And so it completely blew my mind. So instead of buying an option to hedge against near-term downside movement, he in turn decided to sell out his positions and go to cash. That was his signal to him that he needed to sell and be out. So I couldn't believe it. It blew my mind so much I had to stand up and ask him to repeat that. So I said, whenever you consider buying a put, that's your signal to sell. And this is the guy who's managing substantial money, not your cousin's IRA or something like that. And it just blew my mind. And Sebastian lost it when he heard that, as you might imagine. I'm curious what John. You didn't have a chance to hear that. So all three of you, what was your perspective on that? Because I'm still kind of reeling from that myself.
Well, I would say it's kind of like if he thinks he's that smart about it, I'd like to ask him to send me a notice whenever he decides to go to cash, because that's when I'm going to start selling the puts to get into the stocks he wants to get out of.
Yeah, you ask this guy, what about a collar? What about all these other things you could do to offset some? If your premium is your sole focus, what about a put spread? There are things you could do to offset that. But it was just that is still a prevalent mindset out there in these long-only buy-side equity guys who are still, for whatever reason, can amass hundreds of millions of dollars under management because, quite frankly, they're good salesmen. But when it comes to actually managing that money, not so much.
Well, and also I'd like to ask him how'd that strategy work for him last August, back when the world was going to end, or September 11th, 11 years ago, or whatever it was. How'd that strategy work for him then? Did he get the feeling that he wanted to buy a put the day before some of those events happened?
Yeah, there's just so many ways you can go with this. I just had to bring it up because it's still fresh in my mind and still a little raw, as you might imagine, hearing something like that. It was both amazing and refreshing and terrifying and awe-inspiring all at the same time. Interesting stuff.
Well, the other thing he can do is that, let's say he felt like buying a put like on Friday night, but then he forgot he didn't get a chance to sell his stock on Friday night because the markets were closed. I'm sure he could just call the exchange and leave a message saying, hey, you know what? I really wanted to get out of my stock anyway, so if you guys can cover my losses, I'd appreciate it. I'm sure that would work too, right? I've
had success with that in the past. I'm sure he will as well. It's a great approach. But yeah,
tried and true. Tried and true.
Sometimes we forget we're preaching to the choir with a show like this, but there's a whole world out there, particularly on the asset management side.
Yes, ask UBS with their Facebook how that's working. And you always thought the big customers would get,
they get all the love, but apparently not in this case.
Not in this case.
But yes, we forget that there's this whole other world out there, and it's a very sizable one with a lot of assets under management that has no clue or even no interest in even basic things like risk management for
like $10 trillion in assets.
Yeah, I mentioned it before a few months back when I went to the Morningstar conference and came out and was appalled by that, and now I had the same experience last week with some of these buy side guys. That it's just it's amazing how you can amass money under management and really have not even the first clue about real, true risk management, which is, for the love of God, at least using some sort of put or some sort of protective option or derivative investment in your portfolio. It's amazing. Before I get off on a soapbox, I'll wrap up the trading block. But still, interesting stuff. I wanted to put that out there for our listeners so that they know that they are indeed the choir, and there are quite a few people out there who perhaps disagree with what we, or just are ignorant of what we espouse on this show on a regular basis. And all right, with that, we're going to roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the Odd Block. This is, of course, where we hit on the interesting and or the unusual options activity. We're going to kick things off with a newcomer to the Odd Block, Linn Energy, ticker symbol LINE. This is an independent oil and natural gas company with holdings throughout the U.S., it looks like, for the most part. This stock has had a decent run over the past few months, hitting upside moving averages, 50-day and 200-day moving averages, and hit a 4-month high recently. So the stock's looking fairly strong. Closed today at $40.60, down about 0.7% on the day, and a little bit strong on the old ADV as well, or on the old volume for today, with about 2,500 contracts normally, nearly 4,000 on the tape today. And looks like a lot of the love was out in January here, with looks like some people maybe coming in to protect some of these recent gains they've been racking up here in line with the Jan 41 puts really lighting up the tape. 1,500 times being purchased early in the session today, lifting the offer for $2.20 with nearly not even 200 contracts on open interest on that strike. This is all opening paper, and it looks like someone who's obviously been taking a nice run in line, looking to keep that money at least for the next few months. A little closer to home, we saw the OC 40 put also being purchased today about 500 times, lifting that offer for about 60 cents, again with substantially less open interest. So that's all opening paper. We saw put volume at about nearly 6-1 on the typical put volume on a day today, with over 3,000 puts being traded on the day here. So a lot of very focused, a lot of very downside bearish hedging style activity going on today in Linn Energy, ticker symbol LINE. Do you have something to say on that, Andrew, or?
No, I was still blown away by the other guy that just wants to sell the bottom.
He's still on that guy. Okay. I saw your thing popping out there. You're talking about line. I was like, you want to sell line? Okay, go crazy.
No, I was just looking at line, all these limited partnerships with these big dividends,
Good stuff.
That's my just thought on people trying to hedge those big divvy stocks.
Uncle Mike, This is a good one for you here on the old odd block. We're looking here at Pan American Silver Corp, ticker symbol PAAS. Kind of reminds me of the old Easter egg company, PAAS, that you used to do as a kid.
Exactly.
I'm not sure if you watched this one at all, Uncle Mike, but this is they're engaged in the operation and development and exploration for silver-producing properties. They also do some gold and lead and other things too, but silver is in the name, so silver is the focus. This is the name that usually does about 5,000 contracts a day, did a whopping 86,000 today, and this is kind of a theme of the odd block today. A lot of action on the leaps. This was a pure leap play, and looks like a pure a pure vol play here with someone coming in gobbling up 50,000 of the Jan 2014 50 calls, lifting that offer for 60 cents. There's only a couple hundred contracts open on that strike, so this is all 50,000 of this is opening paper here. Looks like a big block of stock went up right around that same time and a little bit over 21. So it's like this was done tied to stock, which is what you'd expect with a big trade like this. And looks like someone looking to hedge their delta risk and really just putting on a very large, sizable, long-term, long vol position here in Pan American Silver, prepping for some volatility to be coming in the year. I
think it's inflation. He's prepping for inflation.
Think this is an inflation play here?
Well, yeah, you're gonna buy leap calls, which has, if interest rates actually ever went up again, there's a little interest rate bump there. There's inflation on silver. I mean, that's pretty aggressive back spread. What is that? $20 out of the $30 out of the money.
Yeah, it's got some upside there. I don't know if you're betting on rates though. I mean, that's been a non-starter for a very long time.
Oh no, but rates and by buying leap calls, you're getting interest rate jing.
Yeah, I got you. I got what you're saying. It's just
you're long silver.
It hasn't worked out too well over the past couple of years. Maybe this guy's betting on a turnaround for that. Maybe he's betting that it's time for the interest rate play to come back into favor.
There you go. I mean, it kind of reminds me. You remember how we had the 200 calls on oil right before that death event?
Day of rage.
Yes, the day of rage. So this is maybe like the day of silver or something.
Yeah, I mean, what do we had? What was our gold rally here over the last couple of days? I couldn't believe it. I'm looking at my GLD. I'm like, where is it now? It's insane.
Speaking of gold, we have one more here to talk about in the precious metal land. If my screens will just cooperate and allow me to bring it up. Another one kind of in your neck of the woods here from a product perspective, Uncle Mike. This is IAMGOLD, ticker symbol IAG. Familiar with this one, Uncle Mike?
Familiar. Don't trade it, though.
It's a mining company. They have gold mines and, of course, a niobium mine, which is where the big money is these days. Niobium, of course. This one's had a decent run, up 13% over the past week. Gave up about 1% today on the day, closed at 15.5 roughly. Again, the story with the mining and the leaps. Looking at the Jan 2014s, this one, another upsides, maybe the same player playing in both. This guy pretty much putting up about a 100% upside calls. The Jan 2014 30 calls being picked up 25,000 times, lifting offers for 95 cents. Again, only a couple hundred contracts open on this strike, so all opening in paper. This guy also blasted out stock against it in the 1582 range. Again, another long vol play, or perhaps, as Andrew might speculate, perhaps this guy's looking for rates to roll in his favor over the next year and some change. Both of these guys are paying relative premiums from a vol perspective as well. This guy paid essentially 40% on his vol range, which is up from about a little over 30 that's been trading recently. So both of these guys paying a bit of a premium to get their vol off, but then again, such a big trade like that, not exactly surprising. You got to pay a little bit of a premium to get it all done. We also saw a lot of people flocking into calls just in general on IAG over the past couple of days. With on Friday, calls were about 12x their normal volume, with the March 18s being lifted on the offer 8,000 times for about 90 cents. So a lot of people wagering on some near-term or a little bit longer-term upside here in IAG. It's not a name I follow on a regular basis. Uncle Mike, you follow this one aggressively or just kind of stick to the GLD for the most part?
Sticking to the GLD. Keep it simple.
So yeah, if you're loving gold like these guys here, then perhaps you might want to take another look here at IAMGOLD, because the upside is hot right now here in IAMGOLD. I think we're going to close out the old odd block and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is where Mr. Grigus holds court, and I get to relax my tired vocal cords. Mr. Grigus, any interesting developments over in the land of OX? Perhaps any little tidbits or nuggets you picked up last week from your great adventure to the Big Apple?
It was a pretty quiet day in the street today. There were a couple of commodities that were moving that I wanted to briefly talk about. But, Mark, I think you missed one of the most important things at the conference, and the fact was we were right down the street from the world's greatest pizza joint.
Amazing how that's possible.
I mean, what chances that?
Amazing how that's possible in New York. Every block you go to, you pass the world's best pizza joint. Ray's, Sally's, Tim's, whatever. Jose's.
And it wasn't very good. But anyway, a couple of interesting things we saw. One was in crude oil. I don't know if you had the opportunity to look at an intraday chart on crude. Heading into the early afternoon at about 1:30, front month October crude was trading in the mid 98 handle, about 98.50 or so. And then within about 1 minute, it dropped $3. And looking at the volume, we saw about over 13,000 contracts trade in a singular minute, which is pretty much unprecedented for that type of contract. Went on the news, on the wire, could not find anything. There was some small talk last week about strategic reserves, being released, but that's something that's always kicked around when there's really no other news stories to kind of quantify a sell-off in the crude oil markets or the energy markets.
This means it means the HFTs have found their way into the big oil futures now. That's their next stomping ground. I see already. CME has already put out a statement saying there was no technical issue. Apparently, people were thinking that apparently we had a mini night going on here, where all of a sudden something was going on Globex that was crushing the crude oil contract. CME saying that's not the case. That everything worked fine. It was just a quote coordinated sell-off of a prolonged duration. So there you go. That answers everything.
Yeah. Well, at least they had the depth to absorb it, because 13,000 contracts, for 1,000 barrels of contracts is a sizable.
That's a sizable chunk. That'll move some crude. Yeah. Andrew, was that you playing around? Did you hit the wrong button again up there in Maine?
I was thinking about it, but I decided at the last. No, that wasn't me.
We've had that.
So that's what I'm hearing, though. That it was that possibly could have been a fat finger. We get those every so often as well, and
isn't it always? When was the last time somebody said that they planned on doing this? Except the guy that sold the day after the crash, sold all those futures on the opening. I forget who that guy was. Famous guy, might have been Soros or something, but some famous guy did actually sell a bunch of futures, and it was, and I think it was the S&P 500 future, and that was the day after the 87 crash, and he actually did sell them into the hole, which I think was is a low that we probably won't see again, I hope, in our lifetimes. But everything else has been a fat finger or a lobster claw, as we say in Maine. Lobster claw.
It looks like he blasted out an order, and it kind of just took forever for the market to absorb it. It took 30 minutes for this order or the bulk of these contracts to be executed. So that's a long time for a fat finger to be allowed to be active. If that was just some clerk hitting the wrong button, you'd hope someone would catch on to it.
Rosh Hashanah today too, maybe lower volume. There is lower.
It was the junior guy on the desk. It wasn't. Everyone else was off at the high holy days. Is that what you're saying?
That could have been the leaning elbow trade too. You know what I mean? Where they lean on the keyboard and they're having a conversation and they look down and hey, what's going on with Crude? And he picks his hand up and it retraces. But so that one kind of lit up the phones for the later half of the afternoon. And early morning into about 2 o'clock Central, we also had the grains. We're also lighting up the tape. There were some crop progress reports, estimates that are coming out this week, and we're seeing that soybean yields aren't as bad as they were anticipated. Beans here were down 70 cents, which is their limit. So we always get the calls of people saying, "Oh, it's limit down. Okay, let me sell it at the next price below limit down." So got to go through the education process to letting them know that no, it's locked limit down. You will not be able to get out, and this could go on for a few days as well. But I don't recall if I ever mentioned anything on my trips out east and west to view the acres of grains that we have in the Midwest. But the beans have always looked fairly decent, while the corn looks like it's a hot tinderbox. But we'll see what happens to grains tomorrow, as hopefully they can they can pop off this limit down. But it was the biggest percent move by the beans in about a year and a half. So it was interesting to see. We had a lot of phone calls on that. We'll see what the end of the week progress report brings for the rest of the grain markets. Other than those two commodities, the rest of the futures markets were fairly quiet, mimicking the equity markets as well.
It is interesting to see how much of your business has migrated or transitioned over into the future side of the fence. Would you have expected this, 5+ years ago, John, that you'd be spending so much of your day dealing with calls about the beans and corn and oil? Well,
I'm an old grain guy. That's where I started back in the 90s.
True.
So I love seeing a resurgence of it, come back into play. I mean, people say they're searching for yields. So that has to include futures as well. And I know when we talked at the conference about year-over-year volumes, and how down they were, the silver lining was a little bit options and also futures. I mean, they're not down comparably to the equity stock market, and we're continuing to see more people when really nothing's going on. I mean, traders like to look for a market that's active, and futures supplies that type of, or commodity supply that type of activity.
I was joking with a market reporter today. I said the only bright spot in the options market is VIX futures.
Yeah,
and it's sad, but it's totally true. That's the only thing that's up: VIX futures and VIX options. Well, thank you for that corn and commodity and oil rundown, John. Interesting stuff. We'll have to change the Xpress block to the commodity block. So much commodity stuff going on, but it's hot and it's interesting, and a lot of our listeners like to know what's up in them thar hills. So thank you for that, sir. Well, but now I think because we're running a bit long and Mr. Lobster has to run, we'll dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we discuss what's on our radar for the rest of the week. And it's kind of hard to see what's on the radar right now because we're post so many things. We're post the Big Apple announcement. We're post QE3. We're in kind of a malaise period. We don't really know when the other shoe is going to drop or what that other shoe is even going to be. I suppose the next shoe is probably going to be Europe in some way, shape, or form. Is that kind of what you have your eye on right now, Andrew?
Yes, I guess in the short term, and just basically watching probably the September vol kind of wither away. So, that's like as some index butterflies, maybe protect with some VXX or some VIX puts. The VXX is kind of running out. We needed to do like a 4-for-1 reverse or something like that, or 10-for-1 reverse split at this point. But that's kind of the position. Just nobody's really seeing much happen. If you buy a little protection with the fly, I think would work out for like 1-2 weeks. I mean, if you're just looking to, that seems like the best way to collect a little premium, because upside wise, I mean, I don't see how we have tons of upside without actually some really good fundamental type news to kind of drive that market higher. Like fixing our debt, picking a president, stuff like that.
Oh, you cranky fundamentalist. Bringing it back to the fundamentals yet again, sir. What more do you want? The government is just printing money for you to enjoy the whirlwind of. What more could you possibly ask for?
I know. It it worked well for any upside gamma. It was nice, but now it's done. So what are they going to do for us now? That's the problem with that Bernanke thing. It's like, okay, the market blew their whole wad right then and there. We were up like 3% total on these last two big between the ECB and Bernanke, and that's it. You got your quarters rally in a day. Enjoy it.
Someone asked me last week if the conference had any sort of bias one way or the other, Obama or Romney. I said these are mostly traders and diehard industry guys. They know both sides are garbage. They very much lean towards libertarian. The less activity they do, the better. So I think that's pretty much where everyone leans these days. Just keep your hands away from me. And that's pretty much the moral of the story. But
they have a job to decide how to spend the money. They still can't do it.
Exactly.
It's like, just do that job.
Exactly.
Do that one job. No, they can't do that job.
Thank you for that, Andrew and Mr. Tusaw. Post Apple, what are you watching this market now that you've washed your hands, or perhaps about to wash your hands of your largest holding? What's going to keep the BBI up? What are you going to be doing these days? What are you watching?
I think I'm just going to go play golf or something. I don't even know what to do with myself. I don't know. No. I'm looking at the markets in general, the markets as a whole. We're at highs right now, and the market's making new highs at this point. And there is the other side of the argument against the fundamental belief is that when the market makes new highs, it's going to continue to make new highs. Now, I'm of the school of thought right now that the market, I'm expecting a pretty big move to the upside or the downside. I'd actually be leaning to the bullish camp, not because of the great fundamentals that we have in our economy by any means, but because of the fact that senators and representatives need to get reelected. And I think there's going to be monetary policy set forth to try to favor that, i.e. maybe Bernanke might buy $40 billion worth of bonds in a month. Who knows? So with that, if I'm wrong, though, I think we're going to fall fairly quickly. So what I'm watching right now is not selling premium, in that I would not want to be trading a traditional iron condor at this point. And I'm not against selling premium in certain situations, but now's the time that I'm looking at it, and I'm looking at a lot of retail traders out there. And just because the condor works 32 months in a row, or however many months it worked for you, doesn't necessarily mean it's going to work now. And with that in mind, with the VIX at 14.5 and the environment with which we're in right now, I don't know if I would necessarily want to be a premium seller in this market environment. And that's what I'm watching. I guess I'm preaching and watching at the same time.
So, don't bet against the self-interest of politicians. Probably a safe bet, I would think, in that regard. They tend to do whatever it takes to keep themselves in that seat. But so a healthy bet there. But yeah, also an interesting one to keep your powder dry. Don't keep blasting out that Netflix downside in this environment, perhaps. Or some of the other names you talked about, Groupon, Ford, whatever your poison of choice is. Perhaps be a little bit more hesitant on the old trigger these days before you start blasting out bids. Perhaps you buy some premium and do some stuff.
Oh, that would just be drastic.
It'd be insanity, sir. Insanity to go long premium. What were you thinking, sir?
Oh my gosh.
All right, and Grigus, I know your eyes are moved off to oil and corn and beans these days. Is that what you're watching for the near term here?
Yeah, we want to see what happens to grains tonight, actually, when they reopen at 6 o'clock Eastern. See if that downtrend continues, or that sell-off continues, or if it kind of stabilizes and forms a bottom. The trend is still higher, but we'll have to see. And then I think the end of the week we'll get a crop progress that'll kind of give us some indication. But also looking at, for the economic side, we got some housing start, home sales on the 19th. I'm hearing a lot of people call it bottom. I'd like to see the numbers back it up. Also, a couple earnings that we have coming up as well. AutoZone on the 19th. We have a lot of people that do play that here, as well as Oracle, if anyone still watches that. And late next week on the 27th, I think that's a Thursday, we're going to see if RIM's going to circle the toilet bowl and head down the toilet. So that's on the 27th.
AutoZone in the inflated camp, I suppose you can say. Not one I actively trade very often, but I kind of haven't watched this one in quite a while. But this one closing nearly 358, up about 1.5%. So certainly some fluff in there. I can see why it's attractive to those premium sellers that float around in OX land these days. Perhaps this is the new Netflix.
Yeah, it's quiet. It reminds me of CMG, where it just continually heads up. But it's been up here for a while now. But
hopefully it doesn't follow that CMG trajectory. Cut in half. That'll leave a dent in some of those premium sellers. An interesting one to watch, particularly if you're following Uncle Mike's advice of keeping your powder dry. But AutoZone earnings on the 19th before the open, so interesting one to watch. You have one more day to do to get your business done out there before the earnings bell rings and it's all done. But speaking of being all done, we unfortunately are all done here on the old option block for today. But before we go, I want to give all of my cohorts here, my partners in crime, a chance to let you, the listener, know what they're up to. Starting off with you, Andrew, what is coming up in the land of the pit?
Actually, we do have a fantabulous event this week. Wednesday night, Mark is going to give kind of a walkthrough of his book. And the good thing about his book is it sort of provides a blueprint for people to trade options in a sustainable way. And not as in sustainable green energy, but as in sustaining the money in your account, kind of like the guys that know your options try to propound on a daily basis here with these collars and protection and all this kind of stuff. So Mark will be walking through parts of his book to basically explain, like, getting through these kind of tumultuous market times. So every time you want to buy a put, you don't just have to sell all your stock at the bottom, which is really aggravating after a while. So
he'll have his co-author there too, right?
Yeah, I believe so. Yeah, Dennis. So
you get the full perspective.
Guys.
The full perspective on the book, not just Mr. Sebastian.
Exactly. You'll get the full Monty. And it's free. And
don't promise that. You might drive down the listener count a little bit.
Well, the good thing is that it's all, it's webinar, so you can't see anything. You
That's
just
true.
have to hear him.
It's all presentation. So he could be nude. He probably is. I think he is nude at most of the webinars he gives. You don't have to see it, which is
pretty
nice.
much. I think in the last 5-6 webinars we've done now, they've all been max capacity. So we've been turning people away. So, I mean, I realize the price is right. They are free, but I believe we do add some value with those things. So if you want them, if you want to get on, you're going to have to sign up probably by tomorrow at the latest, or it will be all full up.
See, when pants are optional, people will come.
Exactly.
All right. Thank you for that, Andrew. And Uncle Mike, I hear the webinar train is back in full effect over there in KYO land.
Well, we still have to get a couple of things through the Nevada State Athletic Commission. Or wait, I'm sorry, our regulatory bodies. But I would say with 99.9% certainty, we announced our first webinar on the new train coming October 2nd, the night of October 2nd. At 8:30 p.m. Central Time, 9:30 p.m. Eastern Time. Mark Sebastian is going to give our audience an introduction to the weeklies. Mark's a good guy, so we're excited about having him. And then we just got a verbal commitment for October 9th. Price Headley is actually from Big Trends is going to speak for us, and he's going to talk about the ways with which he makes adjustments to iron condors. There'll be more commitments coming in, and our goal at Know Your Options is to have one guest speaker webinar per week on Tuesday night. And we're hoping to get our speakers to come on the show to interview with us as well. So we're excited about what we have coming out for the next few months.
Well, it sounds interesting, sir. We'll have to keep an eye on the webinar train to see who you guys have lined up over there. By all means, surf on over to knowyouroptionsinc.com to check out all that and much more. And last but certainly not least, we have the boys from OX. And aside from gallivanting at industry soirees, what else is coming up in the land of OX, Mr. Grigus?
Well, we have our 2 October workshops now posted on the website. The October 6th show will be held in Los Angeles, hosted by former market maker Jim Ruzon, and just announced back to New York, October 13th. He'll be out there as well, giving valuable insights of the trade. So hope to see everyone out there at those two live events, one on the West Coast, one on the East Coast. I'm sure Jim is going to love that week. And as always, we have our free webinars. If you're new to the website, we saw a lot of new people back late Thursday and all day on Friday. A little unfamiliar, want to get their feet wet again, head over to the free webinars and join us for a site walkthrough.
All right, and speaking of unfamiliar and getting your feet wet, that's exactly what we're doing over at theoptionsinsider.com. We revamped our systems from A to Z on the back end, so most of what you see on the site will be familiar, but it may look a little bit different to people who've been on the site for a long time. That includes our new comments feature. It's something you're familiar with on other sites, and we've, after many inquiries, have finally added it to the Options Insider as well, so you can let your voice be heard on some of our more interesting and compelling content that you guys like. We're also working on bringing back the forums in some way, shape, or form and trying to find a way to make those interact a little better with the comments going forward. But for now, if you want to interact with us here on the old option block, you could still do it in all of a variety of ways, including hit us up on Twitter, twitter.com/options, or on facebook.com/optionsinsider, or of course send us an email, questions@theoptionsinsider.com, or of course you can post it in our brand new comment system on the site, and we'll keep an eye on those. Maybe you want to even indicate this is for option block, or we'll just keep an eye on it, and if we find interesting, compelling ones that are relevant to what we're talking about here on the show, we will answer them on the air. So by all means, surf on over to theoptionsinsider.com and check out all the new stuff we have going on over there, and there's some interesting new stuff coming even further down the road. We're working on some fun new projects, and I hope to let you guys know more about them in the near future. But until then, all of us here on the old All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.